Guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is October the 11th. It is about 9 o'clock in the evening, and it's been a tough week and a few days or so in Florida after Hurricane Ian hit the state. Now, fortunately for me, we were kind of okay because we live on the sort of other side of the ocean. But I do want to show you just kind of what it looks like when a hurricane makes an entry into the state. And it's not so much the fact that it's heavy wind and heavy rain causing damage, it's flooding, right? So what you're viewing here is Fort Myers, which is on the opposite side of the peninsula from where I am. It's about an hour and a half or so from where I live. And this is what it looked like when Hurricane Ian came on shore just a few days ago. Now, obviously, a lot of people suffered an enormous amount of damage during this particular hurricane, which not only lasted a few days, but is going to cause some destruction and mayhem and considerable damage for many, many more weeks to come. So that's why I say it's been a tough few days in the state of Florida. We have a phenomenal governor. His name is Ron DeSantis, and he's done some great work. But just look at the water surge here, and you can see how the water, with its gazillions of tons of weight and movement, would just wipe things away. And we're going to go into much more detail on that one. But I did want to kind of just share with you what happened. What I'm going to do this evening is just take a quick look at Occidental Petroleum. And then talk about a new equity, which I kind of found almost inadvertently, which you may want to track and follow with me. I'm not going to say you should buy it, but you can certainly sort of pay attention to it and see what's happening. Anyway, I'm going to try and make this business as usual as best I can, and talk a little bit about Oxy. And one of the first points I want to make here is that, let me just take the screen off for just a second. We have to respect the market, and you have to manage risk. And the risk, in terms of how you manage it, has to match your own personal investment profile, which is related to so many different things I cannot possibly try to even advise you on. But think of things like your age, your current earnings, your spend. In other words, how much money is coming in, how much money is going out. Do you have the ability to perhaps invest or save more money than what you are currently investing or saving? In whatever investments or savings you are, socking away a little bit of money into. There's so many factors that come into this: your lifestyle, your cost of living, your desires, your personal, want to have certain things that might be unaffordable to you, and you're tempted to buy them on credit, like a large house, larger than what you can afford, fancy car, perhaps better than what you can afford. Respect the market, right? Because risk comes at you fast. And the reason why I'm saying that is because it was relatively easy for me going back to early 2020 when I started this channel to say, hey guys, I found Occidental Petroleum. This is ridiculous. This is unbelievably cheap. You can buy Occidental Petroleum. I don't like to tell people they can buy stocks, but I was kind of okay saying you can buy Occidental Petroleum. It's a major oil corporation in the United States. I was very confident that it's not going to go bankrupt at the time when the oil market crashed into negative territory on futures. And here we are today. So, if you bought into Occidental during the sort of lead up after the pandemic, obviously after the Anadarko acquisition, Oxy took a bit of a hit, but then it took a complete nosedive during the pandemic. And you were able to snag some Occidental shares for, $8, $9, $10 or whatever. If you bought it for $10, you're up more than 6 times, currently trading at $64. So you've done okay. So I hope you've taken a bit of profit. I hope you've readjusted some of your holdings, however that might look for you. And I'm going to tell you what I do when the market is very volatile and very unpredictable as it is right now. I reduce the number of equities that I hold to just a small bag of stocks that I can hold for 3-5 years or even longer, and I risk mitigate that way. But I also nibble at the fringes, so I buy a little bit more every now and then from time to time. I'm not buying Oxy. not at $64. In fact, I don't really want to pick up more Oxy anyway because I'm going to get a concentrated position in Occidental in my portfolio if I do, because Oxy is already one of my largest positions in my portfolio. So I don't need more Occidental Petroleum. So I'm not going to talk about Oxy for too long on this one. But let's just look at a few of the sort of features on the slide over here. So you can see right in the middle of the screen, the PE ratio is 6.5. It's super cheap. Based on a price earnings ratio and positive earnings, 6.5 is ridiculously cheap. Pays a little dividend, but you're not buying Occidental for its dividend, you're buying it for its growth. How much growth is there in $64? Well, a number of analysts have said over the past few weeks that Oxy's fair value is around $58 or thereabouts. So it's sort of in that range. Um, you know, months ago when WTI was just heading up and it hit $120 a barrel, I would have said Oxy is probably going to $100. Today, I'm not so sure that Oxy is going to $100, but obviously at $64, I'm quite all right, and I hope you are too. My cost basis on my Oxy holdings is around $12. However, I have taken profit along the way, and I've donated a large chunk of Occidental shares to my charitable foundation. So I have kind of reduced my risk and mitigated risk to a large degree. And I hope you're doing the same as well, because the market comes at you fast, and sometimes faster than what you expect. Right now, it's sitting just sort of left of its 52-week high, which was $77. But $77 a long way from $64. And as you would have known if you're tracking Oxy over the past few days, it's just going down. The institutional holdings is over 80%. And of course, that's mostly Berkshire Hathaway. But you can see the short interest has crept up to nearly 7%. So now there's 7% of the outstanding float that is basically banking or bidding Oxy down and hoping that Oxy crashes. And you know what? Those guys are making money as Oxy goes down and pulls back from where it was at $77 to $64. I'm not trying to tell you that Occidental is not a good investment. I still hold my Occidental in my account. And as I just said, it's a large position in my account. I'm just saying be very, very cautious and respect the market. Don't get too brave, because there's a very fine line between bravery and stupidity. Let's take another look here. What's happening? So coming up soon, right? Just in a month from now, on November the 8th, Oxy is going to report its earnings for Q3 after the market close. 9 analysts have given us a forecast, and the consensus forecast for the quarter is $2.85. Now, if we look down here at the bottom of the screen, you can see that the earnings per share for the last 4 quarters increased very nicely, 87 cents to $1.48 to $2.12 to $3.16. But many, many things have happened over the past month, right? And perhaps especially over the last quarter, which we need to take into consideration. Last quarter, we had WTI at $120 a barrel. Now we have WTI sitting at around 80 something, 88 today. That's a huge, significant change, which Occidental cannot control. It can do absolutely nothing about the price of the commodity. It has to sell at those futures contract prices, whatever they might be. So we're down from $120 to about $90. We know from before that Oxy has been very efficient in cutting their costs and their operational expenses and capex to get their break-even down to about $40 a barrel. So at 88, $90, they are making good money, but they are no longer printing money. And the problem is they can no longer cut back on those costs like they did before. And the reason for that is primarily because of inflation. They're paying more for steel, they're paying more for sand, they're paying more for employees. All their costs have gone up while the price of the commodity has come down. You know what that means, right? It's not so much a supply and demand curve analysis anymore. It's the fact of the matter is simply that Occidental's revenue is shrinking unless they produce more, whilst their costs are increasing, which means lower margin, which means less free cash flow, and which means lower earnings per share. Make sense, right? So respect the market, mitigate your risk. You can also see, if you look back a year, that the earnings surprise easily exceeded the expectations by over 30%, but shrunk to just 7%. A lot of people took me to task when in the last quarter I said the results were good, but they were not great. This is just an example of why I made that comment. So I'm not trying to be negative towards Occidental Petroleum here. I'm just trying to set the stage to make you understand that there are things that you should be looking at. Here's an article just a few days ago from Barron's, which was published in the Dow Jones. PVC prices are falling. Why? They say Warren Buffett should be worried. I don't think Warren Buffett's too much worried about this, but we need to pay attention. PVC spot prices have crashed 46% quarter over quarter. PVC, why? Oxychem. Oxychem is one of Occidental Petroleum's most profitable divisions. Keep this in mind when you look for that earnings surprise, which might not be as surprisingly good as what it could be surprisingly bad. I'm not suggesting for a minute that Oxy is going to have a bad quarter. It should be a good quarter, but nowhere nearly as good as what it was before. The price of polyethylene is down 24% in the last quarter. Polypropylene is down 32%. Oxychem is one of the three largest suppliers of PVC and a key ingredient, vinyl chloride monomer. Tudor Pickering's Matt Portillo is one of the analysts, lowered his estimates for Occidental's adjusted earnings this past week because of PVC pricing weakness. Just because of the PVC pricing weakness, he lowered his earnings expectations. PVC, he wrote, is in absolute free fall. You have some risk mitigation here because Occidental is a diversified energy company, and it has chemical business, pipeline businesses, and nascent carbon capture division, obviously, that's Oxy Low Carbon Ventures. But chemicals make up 25% of its adjustment income just in the last quarter. Pay attention to the macro and make sure that you mitigate risk to suit yourself. Anyway, now, on a lighter note, I want to talk about this stock. And the reason why I want to talk about this stock, it's a funny name, right? PEDEVCO. I'm going to explain that to you in just a second. The reason why I want to talk about this one is because what I do when our charitable foundation manages investments on behalf of people is I very, very seldom put our investors into positions that we do not hold ourselves. That's point number one. Now, sometimes we get a new account and then we make a new friend, and that new account may have a position in an equity that we do not know and that we do not hold. Now, I have a couple of choices in this regard. I can say to the investor, I don't know this stock, so I don't want it in your portfolio, which means we exit. Or otherwise, I can say, I don't know this stock, but I'm going to hold on to it for a little while because I want to see what's going on here, which means I just hold it. Or otherwise, I say, you know what, I'm going to look at this particular stock and maybe we can buy it as well, because if you have it in your account, I need to have it in my account, right? That's how I work. I will never put an investor into a position that I don't personally own myself. In other words, I'm not your typical analyst, schmanalyst in that regard. So now let's take a quick look here and look at this company. And the company, as I said, has got a bit of a funny name, PEDEVCO. The ticker symbol on the New York Stock Exchange is PED, PED. But the funny name, PEDEVCO, is actually Pacific Energy Development. So PEDEV, Pacific Energy Development, is the proper name of the company, but it's abbreviated as PEDEVCO, and the ticker symbol is PED. Now, why is this interesting to me? So you can buy PEDEVCO or PED at around $1. So I would actually potentially want to buy PEDEVCO at around $1. I'm not sure I want to buy it at a premium of 10 cents. It's a little bit too expensive. How expensive? So in the first place, we look at the PE ratio. It's currently almost 34. I want to enter a position on a stock when the PE ratio is around 15 or less, not when it's double that or more. It's not a tiny company, but it is a micro cap. It's got a market cap of only 94 million, as you can see at the top in the middle of the screen there. It's only 4.5% held by institutions. And you can see it's kind of super cheap in terms of its 52-week range, trading at around $90 to $2.44. And right now you can snag them for about $1 a share. I'll just tell you a little quick story here about $1 a share. I previously acquired some stock in a company at $1 a share. I watched it tank all the way to around 32 cents per share during the 2008 financial crisis, only to see it recover all the way up to about $8.50, where I exited. And you can say, hey, Mr. Oxy, that was a smart move. And I can say, no, not really, because eventually the company was acquired by Morgan Stanley for around $18 a share. So if I had hung on and stayed in the position a little longer, I would have made a lot more money. But you can't complain about an 8x return on investment. So if PEDEVCO had to go from $1 to about $8, that could be sort of a replay of the one that I just shared with you a minute ago. So who is this guy? So I'm going to try my Russian here because I know it's not very good. But this little name here in italics is the sort of phonetic way to pronounce his last name, which might be like Kicek or something. I'm not sure. It's Simon, so I'll just call him Simon Kicek, maybe. So Simon is the CEO of the company. He's a Russian-born American chemist and retired oil industry businessman. He became vice president at UCOS, president of TNK-BP from 98 to 2003, and returned to head UCOS, replacing Mikhail Khodorkovsky. Mr. Well, let's call him Simon because I can't say his last name. He's the principal of his personal investment company, SK, which is obviously his initials, Energy LLC since April 2013. He's also the CEO and director of PEDEVCO Corporation. His commitment to the oil and gas industry has inspired him to publish more than 60 scientific papers and 2 books on the oil and gas industry of Russia and the United States, which means he knows a lot more than me and probably a lot more than you as well about the oil and gas industry in general, regardless of the fact that he focused specifically on Russia and the United States. He's also the holder of more than 130 patents. I'm sure the majority of people watching this video do not own any patents, and if you do, maybe you have 1 or 2. On a recent Form 4 filing with the SEC, we can see some of his holdings here. He owns approximately 52 million shares of PEDEVCO, and he holds a big chunk of them through SK Energy LLC and the rest of them through SK 2018 Revocable Trust, which is something that you might be interested in if you're doing estate planning. He holds 5 million shares of securities in direct ownership, and 3,000 of them are indirectly held by his spouse. So might have been an anniversary gift, 3,000 shares at around $3,000. Why am I looking at PEDEVCO in the first place? Well, as I told you, one of my investors has PEDEVCO in his account, and it's quite a large position given the size of his particular investment account. But look at the news headlines here, right? So these are different news reporting agencies: Bazinga, Street Insider, Guru, Focus, etc. Stocks under $2, insiders are aggressively buying. An insider just bought shares of PEDEVCO. PEDEVCO's Simon accumulates another 500,000 stock over September, $500,000 worth of stock. You can see that the investor confidence is positive, mainly because of Simon's activity. And just in September, so last month, the CEO, Simon, acquired almost 500,000 shares at $1 per share. So maybe I want to acquire some as well at $1 per share, but I don't want to pay $1.10. Look at the valuation quickly here. Now I'm going to speed up a bit because I don't want to keep you guys too long. The price earnings ratio and the price to book is the most logical thing to look at when you look at the valuation of PED, because it has positive earnings. The price earnings, as I mentioned, 36 is way too high. The industry is at 11, so you can snag yourself a lot of stuff in the industry for much cheaper than PED, even though it's trading at about 10 cents. And the price to book is 1 on the nose. The industry is at 4. Profitability, not bad. The gross margin for PED is 66. The industry is only at 37. It's got an operating profit margin double the industry, and it actually has positive earnings and net profit margin of more than 10%. The industry is running negative as a whole right now. It's growth analysis. A couple of things we can look at over here. I'm going to look at trailing 12 months rather than the most recent quarter. The industry has been doing phenomenally well, obviously, because of the high price of the commodity, if you look at the trailing 12 months. But PED is lagging. On a revenue growth point of view, not too bad, but still not as good as the industry as a whole, if you use that as a benchmark. How about financial strength? Well, this slide I particularly like. As you know, I always look at debt. The total debt to capital ratio for PED is 0. PED has little or no debt and thus little financial risk. So it has money in the bank and it has no debt. That's a good position to be in. So now I can ignore the quick ratio and interest coverage, which is non-existent. So we take a look over here and we look at the price change of the stock over the last 60 days or so, which is my preferred little graphic I want to look at here because I don't care too much about 5 days or 30 days. It's down about 11%. So most of the energy stocks are down. This one's not down that much. But look at the balance sheet. It looks pretty strong. It's got cash and short-term investments, so cash and cash equivalents. Pretty good compared to 2020. 2021 was good, and right now it's looking pretty good too in the last quarter. The income statement looks pretty impressive as well. We can understand the dip in 2020 because of the pandemic. And you look at the cash flow, of course, it's nice because it's an energy company, and everybody now is enjoying a little bit of free cash flow, which looks better than before. CFRA currently have PEDEVCO hold. So if you are in PEDEVCO, then the suggestion is hold. For my client who I mentioned at the start of the video, who has a position in PED, we're holding. I just want to see what happens, and I want to educate myself about the stock before we do anything at all. I certainly don't plan to exit yet, so that's not a strategy I'm deploying. I'm holding for the client and potentially looking at an entry point for myself should it make sense. And by the way, if it doesn't make sense for me, then I don't want my client in it either, right? So if I'm not prepared to buy PEDEVCO for myself, I will not buy it for my client. On its quantitative model drivers, everything's neutral, so there's nothing to jump at me there. There's nothing for me to look at. The price expectations around $1.18. It's only slightly up from where it is now at $1.10. If it pulls back a bit, it might look more like a buy. The risk evaluation is high, except for the financial leverage, which is debt, which is low because they have no debt. So that's pretty good too. You look at the total return for PED over 5 years. If you are a long-term investor, 23% ain't half bad, certainly outperforming the S&P 500 over the last while or so. This is a screenshot I snagged from their website. So this is PEDEVCO saying they're well positioned to deliver profitable growth. This company is headquartered in San Francisco, and Simon, with the last name I can't pronounce, is the CEO. I don't know too much about him, but I've read a little bit about him. He's obviously a really smart guy with a wealth of experience in the energy sector. As I said, he knows a lot more than me. But hey, you know what? I always like to find these stocks that are potential buys if and when they appear. So in this particular instance, PEDEVCO is something that I'm tracking. I'm not buying. And I have a client who has a position in PEDEVCO, which I'm holding. I'm not exiting or buying more. And for sure, I'm not exiting at this time. But if you have views on this, or if you have thoughts on PEDEVCO, if you've looked at it before, or if you're familiar with the company or know anything about it, share. Let's help educate one another so we can weather the storm together. So on that note, this is Mr. Roxy signing off, saying thanks for watching. Bye-bye.